Okay, we already did the sound check, and we're good. You guys should see the screen as well. I'll probably toggle back and forth and share Merritt's screen. You guys should remember Merritt from a few weeks ago where he came in. We're going to do the same thing today as we did a few weeks ago. Maybe next time Merritt comes on, he'd prepare a mini kind of webinar. He just got back from vacation. How was it, by the way?
Oh, man, a week in Iceland. If you at all love getting out and hiking glaciers and just unbelievable landscapes and mountains and everything, it's saw the Northern Lights for the first time in my life.
Wow,
that was
cool.
Something really special. So it was fantastic.
No, that's good. What's the time change?
It was 5 hours. Not bad.
That's not bad. So it didn't take you long to adjust. But you got back Sunday, right?
That's right. And so
Wow.
the time change there made it even easier, right? It was a 4-hour difference coming back after daylight savings.
That's right. Yeah. Well, that worked out for you. All right. So you guys know Merritt from being, I'm not going to give his bio. I'm not going to do that. We did that. He's from SMB.
He's just a stud.
He's just, yeah, from Iceland. He likes mountains and hiking. But SMB, if you're not familiar with them, it's essentially a prop firm like the one I came from. They generally only did stocks, and now they're moving into futures, and their futures division is run by Merritt. So he's come in a month ago. People really liked it, and so he's back to do a little bit of what we did last time. In fact, why don't we start showing your profile and maybe what some thoughts were coming into today or yesterday, whatever you want. What
Sure.
do you think?
You want me to we could do a little. I
have to give it to you if you want it.
Okay, yeah, okay. Go ahead, yeah. Bring it.
Let me just, before Merritt starts, let me just kind of preface this quick update as to where we're at, because this is a weekly meeting. This morning we had a jump because CPI didn't miss and wasn't bearish, so it was a relief rally right at 7:30 Central, but then the Tillerson announcement that he was being let go created some uncertainty, and so we sold off. We open up, and we're just strictly talking about S&Ps right now, but if you want to talk about oil or whatever, that's fine. But we rallied after the open to make new highs from the overnight session highs, but then dropped back to and through the open, which created kind of a medium-term bearish bias when you're able to do that. But let's go and give controls. We're seeing your screen, Merritt, so take it from there.
Cool. So we can start with the S&P.
That's great.
It wasn't something that I traded today, but it was something where me and my group, we meet before the energy pit open, and we talk about what's going on in these markets. And for 2 days now, we have felt that the S&P's reached a potential destination, as we call it, a potential reversion back to an area that could kind of be it for the move, and a retracement would be likely. So we thought that shorting potentially here yesterday, and then today, wonderful short opportunity right here. It's a little before we got back through the open. I'm sure that this right here was a fantastic opportunity as well, a little pullback into VWAP. Not only that, but if we kind of start with the profile, if we look at yesterday, what's the biggest feature from yesterday's profile that you guys might notice in the room here?
It might to know that this is each is overnight day session.
Each of these is just sorry. These are each pit session, day session only.
Day session.
Profiles.
Okay.
Yep.
So from the open.
From yesterday's profile, what is a very distinguishing feature that someone in the room here can point out for us? Before
they answer that, though, and they're answering it now, what again, this is just the from the 8:30 Central open till the 3:15 Central close in the S&Ps, correct?
I actually cut it off 15 minutes earlier. I do this kind of that. Yeah.
Okay, that's fine. So that's the hours of this profile. So a couple people are saying VPOC and balance. Even distribution.
Definite balance.
A poor low.
But poor low. That's what I was looking for.
Oh,
look at that, guys.
That was Carl. Carl said that. I said, no way. I'm not even going to repeat that. And he got it right.
Carl.
He got
that guy. I tell you what. Had a babe, Carl. You show him. All right. Pour low, absolutely. So, you know, if I were to do some kind of presentation today, I might talk about, auction theory or auction market theory, for the full phrase there, and how that all works, and these concepts of excess and balance, and how having that type of a framework is just absolutely crucial for market understanding and being able to take that theory almost like you're studying physics, okay? Like the way the world works. I know that if I drop something off of a mountain, I can mathematically figure out air resistance, if you want to get really complicated, and the gravitational pull. What is it, like 9.8 meters per second squared, whatever that is. You can figure out when that thing would hit the ground. There's laws that things abide by. As market profile people, as auction market theory proponents, we believe that there are similar laws that we can essentially learn and apply. And one of the main topics that everything is kind of built on is this concept of balance and excess. Okay, so if we were discussing any type of auction at all, one where buyers and sellers are trading and it's going on. So some people might call this a triple top. Like regular price action people would say, oh, we got a triple top here. Oh, we had a double top here. That's bearish. Not according to auction market theory. Auction market theory says that if we continue to come and visit this level and the buyers are not shut off there, the sellers are not aggressive enough to rapidly move us away from that area, and we keep coming back to that area, trade is being what we call facilitated there. There's trading that's being done. You can go all the way down to the lowest time frames and look at a footprint chart and see those type of things. You'll need to learn what volume is sufficient for your market. Those numbers may be different. Those numbers are different for something like crude oil, which is a little thinner, to the S&P, which is thin compared to what it used to look like in a lot of ways. But those numbers are still going to be way higher. 1,000 contracts at a level on a short-term footprint chart for me is very significant in crude, whereas that's kind of normal behavior in S&P.
Are you looking for, let me interrupt you a second, are you looking at each return to a particular top? Are you looking for higher volume each subsequent test?
Not necessarily, no, just that there is decent volume being done at those highs. We don't trade up there and 15 contracts get done at the offer and then nothing, thin, and then there's volume back in here. Volume is trading up at these highs.
And it doesn't have to be at that price, but in that area. Up to it and back.
At the highs, within a couple ticks, yes.
Within
at those highs.
There is volume. It's not has to be super high, but there's just
decent volume would be the right way to put it.
Okay. And any laws that say more volume each test?
No.
Okay.
No. Not that I'm aware of.
No, that's fine.
Yeah. So what this is telling us is that trade is being facilitated. Buyers and sellers are doing business up here, which means the high is probably not in. As we would see on a profile, this would be called a poor low. It's the exact opposite. We continued in D period, E period, and K period to come down to a low and not break it, but just get to it. That's not a bullish thing for the most part, according to auction market theory. And so that's kind of balance. There is still kind of balance at that point. There's two-way trade occurring. A lot of different words we could use. When we see something like this, now this is different. This, my friends, is what we would refer to as excess. Now we're putting in an excess high that we had kind of a blow off top, a capitulation, a wick, There's a lot of different ways people talk about these things, but if you understand auction market theory, you kind of understand a little bit deeper the principles behind it.
A
And
head
what's
fake.
happening here?
I don't mean to interrupt you, but a head
Head
fake.
fake, absolutely. Yeah, shake and bake. That's a term we use in our room. We like to call it a shake and bake. Um, what we would typically see if this was a good head fake is the volume really, really dry up. It gets kind of thin. The buyers are not continuing to just buy, 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 buy. They dry up, and the sellers get so aggressive they slam the bids, and there's no extreme passive buying order flow there to really absorb it, and we revert right back into what is now this balance area. So we have balance, and we have an excess now at the high. So now would be a time where it's probably a better idea to short. And if we look at the S&P today on multiple levels, we had this poor low here, but take a look at kind of this pattern here where we start to kind of compress up into this level. That's going to be something we talk about a lot today from my perspective, because it's what's going on. And if you'll forgive me, I have to continue to check on crude because I am in a pretty important trade there. What we needed to do is run up and create a bit of excess and take out that overnight high, and then you see we revert back into this overnight kind of balance, and then this retest right here, that's a trade that we love right there. So again, it's not something I traded today. It is something that I stepped out onto the floor with my guys that are here, and we were discussing that. We call it a return pullback type of play. Mm-hmm. I'd love to take a look at your charts here, Anthony,
Well, here,
and kind of see what that looked like from your perspective.
I had the same real-time analysis, only described it differently, essentially the same way, said different, without necessarily the excess or a profile, but it was, in a nutshell, it was, hey, if we're going to open up, make new highs through overnight to 8 or 9, wherever we had went to, why the heck are we all the way back to and through the open if it's that strong? And so,
not to mention that poor low that we had down here, the opposite end of the spectrum, that's a destination to go take out because that low is likely not good.
That's a magnet, is a word that I use. I didn't pick that up, though. That's one thing I didn't pick up. That's way down at around, what, 84? I don't know. It's around 84, 83. One thing I said is don't be, so when we were trading in the upper 90s, it's don't be surprised you close your eyes and we're in the 80s. And heck, now we're in the 70s. Where are they at right now?
Yeah, 79.
So it's like
traded as low as 74.25.
And it's because of that, you make a higher high and you come all the way back. Now that doesn't mean, all right, just sell it, but look for a place to play it from a medium term bear kind of type of trade or short side. And that's fine if you want to buy it, but keep in the back of your head that if we were strong, why did we come back 10 points after making a higher high? So keep a short leash on any longs you might have. Don't be too aggressive in longs, because this is starting to play out a scenario that the medium term type of guys are maybe jumping on. And so you'll start to see real selling come in, which is getting people trap long, trap long, trap long. So that's great. I mean, you had a magnet way down there. And then you were like, well, let me wait until we have a bearish transition. So let me go to my charts.
Yeah.
And get rid of that. Change presenter to me. Show my screen number, that one. And can you see it?
Yep.
All right. Just something that you see quickly, that these edge zones really give you a really good, like, if you wanted to sell it, you shouldn't look to sell it in there. It's kind of like what Merritt said. The more attempts to a certain area, that I've said 1,000 times, the less likely it's going to hold. So at some point they were going to come out of this balance. And once they do this, you're short time frame bullish. That's all.
That's right.
Now that's what's happened since Tim and I came on. Let me rotate down to transitional moments, as I call them, on a 4-point figure. If with what you have in mind, see, you don't know it's an excess high when it's trading 07 or 08 or 06 or 05 yet. You start thinking it's an excess high probably when it goes back into yesterday's balance, right? Or when would you start to say, hey, this is maybe a blow off top? What price?
For me, it's probably '04,
Okay.
those near those overnight highs. And then you have yesterday's highs near there at kind of almost 2. So that 2 to 4 area was really.
So for me, and I pulled this off, this was the first moment on these highs. Not that I tried to get people, all right, guys, it's going all the way to 76. By no means. But this is the first transitional moment that I'll often paint on a footprint where it comes down a little too far, too quick off this pop. So it's a short time frame blow off top in a way. It happened here, but the difference is when it happened here, the NASDAQ really penetrated through some good support and laid out some good resistance. So you had a correlation along with this 2-bar sequence to say, that's a bearish transition. Are we going to go down to evens, 80s? No, I don't know. But we might be, if you're bullish, be careful if you're still bullish because it's a little bearish transition. So for me, it was really bearish in there. And if you weren't bearish at that point, you got to start being bearish when you take out, for me, these edge zones. That is this one, and then definitely the open. When a market comes that far above an open and slices right through it like it's not even there, it's when you really got to take your horns off and then go back and analyze some of the profile stuff that you already would have based on Merritt's preview. If you're looking at pour low, blow off top, now you've got those things lined up. You got a destination, as he calls it, a magnet, as I call it, at the pour low, but that's way far below. You got the pour high, not the pour high, the blow off top, where it makes an overnight high to 05, comes all the way back to 93 because of Tillerson, re-rallies to 01 half the open, goes to 08, and then wham, comes back to and through the open. So in this sequence right in here, medium term, and this is why I'm saying this, because I said it at this moment, at this exact moment when this is all we've seen, so medium term guys are bears. Medium term guys are bearish, looking for places to sell it. And so the best places to sell it aren't going to be where it ends up going to and stopping. But if you have a level, you look at, all right, I'm going to play a pullback to the open. You already have that as a level, or at least you can have it, and you're playing it from the short side. Does it work? No, it doesn't work all the way down to 80 if you're playing it that far. But if you're playing it all the way down to 80 and you're selling evens, you're not just risking 4 handles. So it does work in this area. If you're playing it shorter term as a scalp on the first portion and trying to ride another position lower, you're looking at the open holding until it doesn't. Maybe you're waiting for your when moment to be, hey, the bears have been in control a while. Let's take a short time frame, let it go bearish, bullish, back to bearish. Then I'll play it from the short side. And that came in this bar. We painted this bar in real time way before it was making these 98, 99 lows, the low of the move at the time, 97. It was coming out of this consolidation, coming out of this breakout, meaning this was going to get taken out, or when it was going to get taken out, there was going to be some momentum because of the rotations that you had. And then all the selling comes in highlighted by these edge zones. And it's like, if you want to get short, your when moment is playing a breakout potentially through there. If you're trying to play out that bearish scenario, but at the very least, and this is what's most important, you're not trying to get long here and getting picked off. And not even based on Merritt's preview or my idea that if it was so strong, why did we go from 08 to 98? Just based on this short time frame, balance came in, how many times you think it's going to hold on this small range, and you're subject to downside. Now you have a good way to create a bias based on a profile. Very simplistic as you understand it. The story starts to play out. You drill down to a shorter time frame and find your when moment to play it on the short side. And if you played it all through here, you got a little bit of a head start, but it either went against you or you got the hell out because it was giving you time to go, time to go, time to go, and it just couldn't, and it just didn't. There was another moment. Now that was
I think there was like a second chance entry. I'm not sure if that's where you were headed, but even after that kind of the retrace back into 98s, I thought was if you did not get involved, let's say you were just really bullish and then finally that bar really changed things for you. I thought that you got chances later on. VWAP was just in that area. It was retesting those
Yeah.
prior swing lows. I would imagine you got an edge zone there, it looks like.
Yeah,
Um,
98 quarter. And I had said
yeah.
to guys, if you didn't anticipate a breakout and get short, that's the better place, but not everyone could get that. If you're bearish, if you're overall bullish that we're going to go down and we're weak, the poor low, all that stuff, which is great, you're looking at, and I said this retracement, this dotted line retracement wasn't going to probably come up to here. It was going to be shallow, which means short, because there's too many people long and stuck that are all trying to chase it down. This bar was too long to the downside with speed throughout it. And it went through the open again. It went through this green zone. It went through this green zone. It went through the VWAP without even hesitating. So then, exactly right, 98, that area held as resistance, a second chance opportunity. And then, again,
Even on a little higher time frame, like right in here. Yeah, there we go. Like that was the retrace I'm talking about. I'm a little bit, I guess, longer time frame than you.
no, and that's great, and then you play it. I got a little bullish in here, but just on this 4 PNF, where
Mm-hmm.
in this area, at this moment, you don't want to sell it. You're going to
Mm-hmm.
have to wait and sell it something a little better, something a little higher. Where you're wrong, above the VWAP, right? A few ticks above the VWAP. The longer the time frame you are, the bigger trades and the winners you're looking for, right?
Mm-hmm.
Merritt?
Right.
Bigger rewards and slightly bigger risk. Not necessarily bigger risk than reward, but bigger risk than a guy who's just looking for 2 points. If you're
Right.
looking for 5 points or 6 points, you're going to risk a little bit more than a guy looking for 2 or 3 points. And that should just go without saying. But coming in, this was at around 10 Central. The market got bearish again, and you could see me highlighting this bar because it just was not going to hold this balance forever in here. And I think the NASDAQ went lower. So let's say you didn't sell it with a resting offer in the 98 even area. You stood up in your chair looking for a breakout to the downside, or at least if you were short, you knew you were shaking the champagne. Then look at all the sellers come in to keep this non-coincidentally atop for a long time as it walks down and holds. Again, this is a double stack area. There's no coincidence. It comes back and holds several times. Now 96 is the new line in the sand. But all these red levels continue to hold and allow you to ride it down if that's what you do. This is an old level, but allows you to write it down. You're not going to hold on to something all the way to 76. Most people aren't. You might be in and out a few times, but there was really nothing to get you out. Like there was never a 4 PNF that closed above a red, except this guy right in here. But this double stack held it. There was nothing that until this right in here gets a few ticks above it, and you get a little bullish. Does it mean forever? No, but you wait. And I love going through this stuff after because guys hear my analysis, and I know your guys do real time. So there is no threat for when you say something or I say something that it's hindsight's 2020. We go through
That's
this
right.
stuff real time all the time. That's what's really cool about it. So it's like,
Yeah,
hey,
that our conversations here, these kind of hindsight review things that we do, that I believe they're truly set apart from other hindsight analysis that most people might do because you and I both have recorded sessions of what we were doing in real time. So it's
right.
a little
That's
different.
We're not doing this in a vacuum. If we were doing it to a audience that knew nothing about you or I, it might be different. But for guys
Right.
who know about us, it's like really eye opening because it's like now you have a bias. That's what I'm trying to work towards with guys is to get them a clear bias and then just work on trading it from that side and using a
Hmm.
scale out approach to protect from nice winners turning into nice losers.
Well, I
Um,
think crude today is going to be a really fun topic based on every single thing that we've talked about so far today.
let's go to that. I'll give you the controls. But right in here, you'd start thinking bearish because it cracked through a green. And if not, you're anticipating what? You're anticipating sell stops below here. You get them. Say you don't get on the team. Remember, you're bearish. You're only looking for short trades based on the analysis without the poor low, with the poor low. But the fact that, hey, we did that in the morning. If we're so strong, why the hell we come all the way back? So if you're just playing, you're anticipating sell stops in here, you don't catch a breakout, you're looking for rotations back to that area, back to the old support, new resistance. And say you don't catch this little pullback. Fine, you didn't catch it. Should you be trying to sell it down in here? Of course not. There's support. You probably should be getting out of a short that you're already in. You see it up. Do you sell it here? Do you sell it one in here or in here? Maybe you do, but do you keep trying to sell it if you didn't? If a guy came to me and he says, Anthony, I was playing it from the short side. I missed this pullback. I didn't take this one. I didn't take this one, but I decided to take it short there, and it didn't work. I'd throw him out a window if he was close because he didn't. He just said why he shouldn't have taken this one because he kept miss. Hey, don't be aggressive after you miss a few good entries. Be passive. That's really important.
You see athletes do this even. It's really no different. We're coming into March Madness here. Everybody's watching a little basketball. Think about a basketball player. And I apologize. I forget if I said this before, but this is one of my favorite examples as it relates to that topic, where a guy makes a turnover. He makes a sloppy pass. It gets picked off. High percent of the time, what that player now does that made the error, that made the turnover, he now goes and commits a stupid foul because now he's overplaying based on frustration that's come in, and he wants to work harder to overcome and make up for it. Traders do the same thing. You miss a trade or two, boom, next thing you know, you're taking stupid trades because you're trying to make up for what should have been yours or whatever. Same kind of human nature.
That's a great analogy. And here's taking it one step further. It's even tougher in a sport like baseball because the ball isn't always hit to you the next time to make a great play from an error. So it's really grinding you out mentally. I want to get, you make an error, you let your team down. Well, in hockey, you have another player to. In basketball, you're in the game. You know what I mean? You have a chance to make it back, and oftentimes you overcompensate, like you just said. If you could catch yourself and check off, those are mental mistakes. Those are what those are. Those are fixable. Physical mistakes aren't in athletics. But if you could avoid the mental mistakes, which is where good coaching comes in, is to pull the guy over and say, listen, that was a dumb pass, but just reset. Don't do anything stupid. We don't have a lot of people trade their own accounts, Merritt. They don't have anyone looking over their shoulder to coach them. Tell them that. And that's where it's tough because now they make the mental mistake overcompensating and don't even realize it. And they blame the strategy then, right?
Go on tilt, don't have a risk manager looking over their shoulder to notice that they're really behaving out of their normal type of.
To your analogy, you just start blaming the ref. You're making real fouls and you're blaming the ref. It's his fault because you made the one. I go back to it all started.
The HFTs, baby.
That's it. You blame everything. You blame your own strategy. You blame your mother and father for having you, and you go all the way back. But it's like it all starts from one stupid idea too. It's like people who add to a loser or whatever. It's just one stupid idea that turned into a catastrophe. That if you didn't do that dumb idea, which they all should be. That's what I tell people. All your ideas are stupid, so don't marry them. But you got to implement them. If you have an idea to get short, be consistent. But this is like without knowing what happens next. I do know we go down from 85, but if you just see this on a chart with greens and these reds starting to fire up, you got to imagine this is a good place to get short. Even if it doesn't work, you won't get yelled at by a risk manager. Even if it doesn't work. It probably didn't work. But you took a shot and you want to take a shot early on in here. It goes your way and you have time to maybe get out. Forget about it. You take a full stop because it doesn't work. Doesn't matter. It was a good trade, managed risk, got in at a good location, had a little head start, didn't work. Maybe you even scratched it. Now look at this. Long up bar, long down bar. In our group, on a 4P&F, that's a bearish transition. It's no coincidence that the market, didn't go down. It stayed below the red. It eventually comes down. But usually it'll even come down in here. It won't take this long to play sideways or go sideways. It's kind of this midday drift. Let's go back to you in crude oil. and go
Okay.
over what you kind of previewed before that market opened. Let me give you controls. You should see them pop up on your screen.
Yep. All right. So in crude today, there is this thing that's evolving over time, and let me bring over another chart. So this is a very long-term chart. This is it has quarterly profiles on it, so it's a 150,000 volume bar chart for crude. And one of the principles we talked about earlier, so this is very long term, okay? So one of the principles we talked about earlier was that lack of excess and whatnot. And we thought we were seeing that. We think we are seeing that. Let me put it another way. In this area here, in crude right now. So coming into today, we're thinking, and by the way, if we really, really were to zoom this out and go to like a daily bar chart, I can tell you that this area right here is the high from 2017. It's also the high from 2016. They're almost exactly the same level. So overall, this is massively, massively important. You can't even see it on this chart because it's too short term to see.
Does this go back to last October? Or how far does this go back to on the bottom?
You can see September, yeah.
Okay.
Yep. But in general, crucial level. And the thing is that what we're seeing right now is this succession of lower highs, and we continue to come to this area. So that was bearish in our minds, just on a kind of a very big picture time frame. Now, beyond that, we had some key levels around this. Let's call it 6130, really important area. As you can see, now this isn't perfect, and this is what's really difficult about trading, but you can see that on the 7th here, we got below this area and kind of held and built balance below it. On the 8th, we traded up and wicked it and traded down. On the 9th, we traded up and kind of compressed and compressed. You see there was a little micro poor high here on C and E period, and then we blew through it. Why do we blow through it? That's because it's important. There's stops there. If we blow through it, build balance higher. Next day, we kind of traverse through it so it doesn't look as significant, but sometimes these levels kind of persist. And this is a longer term level as well. Today, we open in range and value from the prior day. One of the first things we do is we test yesterday's value low, start to drive higher. We get above yesterday's value, above this level. So this was my bullish or bearish bias, what I call line in the sand for the day.
I like it.
So I was getting short off the open. In fact, you can see kind of my trades that I was taking in real time. Took a beautiful trade here, scaled out of some. I believe I scratched out of all of it, got back in, flattened, got back in, and went in my favor, and then got out again. It wasn't working. Something's not right here. Buyers were starting to take control. Boom, we blow through. Here's the line in the sand. It's right here, this little white gap. Boom. I always love to tell my guys, when you have a quality line in the sand, more times than not every time, sometimes it's just terrible, messy, random markets. If you see quality volume and order flow really blowing through the level when your thesis is invalidated, that's a compliment. That means that you are really in tune with what that market was doing and where quality risk reward was. A lot of people, they think, oh man, I was way wrong. No, you had a really good line in the sand.
That's
so I
right.
actually try to, yep. So I actually try to
expand on that. Go ahead. Because I often say in short time frame, when it blows, if you got good levels, they sometimes work better when they don't work, because the bias shifts if it blows right through it. And oftentimes it'll give you a chance to come back, resistance, new support. in this
Massive.
case.
Yep. New opportunity. Absolutely. So that's what I tried to do here. I actually went for a long because it was a bias shift for me. This was a valid pullback according to the way I trade, to try and get long. So I tried that there, stopped out, didn't work. And then everybody's kind of shifted here, and then boom, crazy day in crude. I mean, if we look at the profile here, this is an outside day. Well, one of the things we were talking about was this compression that was occurring overall in this market. Yesterday was an inside day. Boom, we run across yesterday's high, blow it out, come back, and now we've seen us blow all the way through the low. So kind of a crazy day in crude, and a lot of losing trades for me. Sure, I made a little bit of profits on this first one and kind of scratched the second one. 6-7 tick loss on the third one. 6-7 tick loss on this one. So I'm not doing good on this day. But guess what? My hypo one, if you will, which was to be a seller below 61.30, comes back into play. And I thought this was really interesting. I'd love to see what you thought about this. If there's anything there.
What time?
It would be 9:37 area, your time, 9:37 Central. So I thought that the buyers were kind of trying to lift into this area and really getting squashed, unable to put anything together. So I was able to get on the short there. I'm still in this trade as we speak. I got into an ad here. I got stopped out of the ad. I got back into an ad.
You adding to the winners?
To the winners, yes,
Yeah.
yes. I have very specific times where I'm allowed to add, and it's typically we need to be in what I call imbalanced intraday, which is trending in my book,
Right.
and then typically outside the prior day's range. It needs to be kind of a quality imbalance, if you will, on that higher time frame. So right now, to me, I'm holding on to this. It's looking, very flaggy, bear flaggy in my book. And so if this starts to break, and if 60/20s give way, that is, by the way, this breakdown right here on this really, really higher time frame. There, it's going to be massive stop runs below here. So that's what I'm playing for. Kind of some not just hindsight, but real time current trade position here for me today.
61.30 was that line in the sand. Then you went from bearish, bullish to bearish.
Correct.
Okay.
Correct.
So then,
and I thought that this 937 area was really, really interesting in terms of order flow, and buyers really not be able to get anything accomplished there. And the sellers just took back control quite easily. I thought it was a place where you could really put on some risk with quite small, distance to your stop, which allows you to get bigger in the trade.
And that's this area on a 6 PNF in oil. Now remember, we're going off the premise that you're bearish through 61.30 again. So you're looking for the sell side. First off, you got balance on a 10 or a 6 PNF and the ability to cite where buy stops and sell stops are going to be above and below. Buy stops above there, sell stops below this yellow line. Of course, they came out. You'd have to anticipate it. But right now, you're still 20 cents above or so the 30. You're really not bearish till you penetrate 30, which generally wouldn't be until this down bar at your 9:35 Central Time. You have shallow retracements back to thin spots. So you finally zip back through 30. You don't know that until probably this area, all right, that we zip through it. You certainly know it at the bottom of this bar. And so now you're looking at where to get short. If you wait to go back to 30, you miss this particular sequence, but it does hold these edge zones, giving you wrong above certain zones. And then it just continues to break any kind of green with a couple rotations. It stays, even if you don't have a red edge zone, you look for thin spots where the market picks up speed. That's what a thin spot is. You see it in there. You see it in here. And
it's kind of like what we talked about a couple weeks ago in your room here as well. Kind of what should have happened And
Yes.
I thought after quite that move down, um, buyers should be able to put something together. They should be able to retrace to 10 or 15 and kind of that point of that pain and that
Yeah.
threshold. They couldn't put anything together. And we go from 10, from 9:34, 35 kind of time, and now all of a sudden it's 5 minutes later and nothing has been done. They're just blah, blah, blah. And so time, I think, was a component there. Not only the volume and what we typically rely on, but they just, time's marching on, marching on, marching on, and they're unable to do anything. And that was not normal. That was telling me something at that time.
And well, it's like the bottom. You always have bottom feeders. Everybody wants to buy a sell off because the price is quote cheaper. If it's lower, it's cheaper. And sometimes they're right and they get a bounce. But what you're saying is the longer time goes on, the more they're all looking at each other saying, "Uh oh, I'm
Uh-oh,
long
this
and
isn't
wrong."
working.
Yeah, this ain't
Yeah,
working, and that's what generates the selling. Here's a ton of selling that came in quick through 60, 75 down to 60. So
that's right. 60 was our next level to get down into there. Absolutely. 60 cents, 60, 60. And that's what kind of we're still at this moment kind of dilly-dallying around in, seeing if we're
and
going to.
that's because the strip of big, quick selling came in between these two yellow lines straight down. So it's no coincidence
Yeah,
that the market is staying at or below that zone all the way
right,
through here. Sells back off. And remember, these are 6 PNFs, maybe a little too low for the kind of action you have today. Maybe a 10 PNF might be better because it seems to be a
right.
little
Really wild
noisy.
swings today.
But man, this thing stays bearish until really, I mean, I could see a long down up bar and it just gets sideways. Here's a big jump, get a little bullish, but it's not even, when it gets a little bullish, it's more like it just doesn't go down, but it doesn't go up. It's sideways.
Right, right. Which is why, I've put on a little size again, kind of back to a full position here instead. I was in from 98. So now I've kind of taken scales and then putting that size back on and seeing what can happen. Look, guys, there's no certainty here. Like this critical area could continue to hold. We could continue to bounce and kind of range in this area like we've done for a month. So it's a very big picture idea. But what I love to do is to take, and you can, so big picture is very relative, right? Big picture could be yesterday's profile. Like one thing I think, and I'm sure you see this a lot, Anthony, is people get lost in the weeds. They get lost in the trees. They fail to see the forest for the trees, right? They forget context. A lot of people don't even have a great way of reading context and understanding that. They're just kind of totally just looking at, kind of like a footprint chart or whatever. And there are people out there that are successful with that. I think it's superior to have some kind of bias, some kind of context to be able to trade from, and an idea of what the possibilities are in the day. All my guys, we come into the day with at least, typically just 3 hypos. It's typically one is a bullish scenario, one is a rotational rangy scenario, and one is a bearish scenario.
And one of the 3 is going to happen, but you're inside each one. All right, this is 1, and we could go from 1 to 2 to 3. But
and it helps you transition. That just
yeah,
like you said, we can go from 1 to 2. A lot of people, they say if they don't have a 2, they're wrong, and they're just saying 1, 1, 1, 1. I
right.
still want it to be 1. Damn it, blah blah blah.
You got to
And
have the market change your mind.
that's right. And your zones do a good job of that on what I would call a short-term basis. And then market profile does a good job of that on what I would call kind of more of a medium-term basis.
And that's part of what these meetings are, is to blend these two powerful
absolutely. They're perfect
methodologies.
pairing.
Here, if I looked at this, not knowing what oil did from after 10:30, you see these greens come in on the way up. They should hold as support. What should happen doesn't happen. They slice right through it. This is a down bar. So, of course, old support, new resistance, and they hold it. Is that the best location to get short? Well, it's not the worst. And they come off. Now, what is it, like a 15-cent head start? Comes right back against it. And at this moment, before this green comes out, I'm thinking I can't be short-term bearish anymore because this red, let me draw better. This red on the way down should have held. They should have held it there. And when they didn't,
Yeah.
it's like, okay, now this is bull. It's only bullish on this time frame. And so then you walk back to real time and you could see us holding at or above this line until it doesn't. And the
Yep.
bears take back over. But this
I
is,
mean, just look at how it just flushes through when it comes back through there. That's because it was significant. That's because it was a good
yes.
level, guys. These are the kind of things we're talking about.
And generally, this would have held in here, but it flushes through because it held down here 2 times. And this is a really tough. If you weren't already short like you, I could look back at this, and this wasn't a very easy place
No way.
to get long or
No.
short in
I'm
its
I'm
30-cent range.
I'm at a loss right now as to what's going to happen next. I have no idea. All I know is it's gone sideways. It's gone choppy.
Yeah, this is really noisy to me because it's like, all right, it's bullish when this green line gets set out. It holds, it holds, it holds. It doesn't hold. All right, that doesn't surprise me. Then it holds as new resistance, new resistance. Then it doesn't hold. Now it holds new support. It's continuing to go back and forth, passing the torch, which, after a big move down, isn't that surprising?
Right, right. And time of day factor.
That's true.
Most of what you and I talk about is kind of quicker morning trade, and this is a slower kind of afternoon phase here. So,
And that's a good point because probably within the last half hour, 1 to 1:30 Central Time is the last half hour of the pit session or the day session for oil. It'll probably make another big move directionally without kind of get out of this chop like they often do.
right.
But no, this is good stuff. That's the direction that these meetings are trying to take people, is taking the two circles. That's why the image, the beginning of this, is two circles. And it's like if you could take a skill set from one guy, a skill set from the other, and that overlap is where the success lies because it's taking a great bias and ability to execute. Merritt has both. And on this side, a great execution way to look at it to satisfy location. And the
Yep.
overlap, boom, is your success, where your
Yep.
success might lie. And both are important. You have the best bias in the world, but if you don't have a good way to execute it and finding good locations, you'll be on eggshells and have
Yep.
fear
Just as bad
dictate.
as anything else. Right.
Right. It sucks being right and either not making money because you miss it, because you're fearful, or you lose money because you're a cowboy and you reach and you
Yep.
lose money and you're ultimately right. That's very frustrating, and that's where mental mistakes are going to come, like in your
Yep.
basketball analogy. So, no, that's good stuff. The You guys have any questions before we wrap it up? We've got about 8 minutes, and then we have to have a hard stop on this session. But I'll wait for these questions to come. Could you see the question box, Merritt?
No, I can't.
Really? I thought presenter or your
I
presenter.
see a chat.
No, so far there's no questions. I'll give guys a couple more minutes to kind of type them in. Just what I really liked about the profile, that the way you explain it, is just the simplicity of it. It's like, where are we at in reference to previous value and balance? That's it.
Mm-hmm.
And
Mm-hmm.
what I do is I take a look at a 24 PNF. I'll tab over to this, and you could get a sense of where balance is. I mean, this isn't clear balance because we had this blow off here. Well, we had this CPI and Tillerson was that price action before 8 o'clock Central.
Mm-hmm.
But you see this balance in here. And right when
The
you
retest that's occurring right now, like to see, are we going to continue to hold below that old balance? That kind of
when we got into this
55,
rectangle
65,
in here,
85.
it's like, if it's strong, why the heck did it come back all the way from up there?
Right.
Shouldn't have dipped down. And now they're dealing
Right.
with the middle of value. Boom, they zip right through it. Look at this retracement, right down to pretty much the bottom of what the value area was.
Mm-hmm.
But this is, there's another chart that I look at and people laugh at, but I do it on purpose. I make it hard to see. Take a look at this. So you really got to squint your eyes and pay attention. And that's the reason for it. when I was building this chart. It automatically came in white, and I'm like, man, this is hard to see. But it made the point that you got to look for it. So this '08 area, if you follow this yellow line across, there was some balance. The last balance came in over there, and I just plot the middle of it. I don't get into the PLC or anything else, just the middle, which I don't think is arbitrary, of a decent balance area. That's maybe why '08's held. That doesn't mean I just sell it there. Just that's a target if you're long. This was no longer a level 85, but probably nothing until down in there. You could see a lot of air between,
That's
right, from
That's
here
right.
to here, and we just kind of jumped down into the middle of it. Could you really quick, because we only got 5 minutes, someone asks, go into when you're adding to winners a little deeper?
Sure.
What makes you, is there something that you have rule-based that allows you to add to a winner? Because that's not one of the hardest things someone could do. It's easy to add to losers. People do that because of emotion, right? Adding to winners is tough.
Sure. So to be clear, I essentially never add to losers. There are, I mean, maybe 0.5% of the time, I just want to be totally honest, there could be times where I premeditated will put on half a position size and say if it continues to go against me, within, again, I have a clear line in the sand of where the idea is wrong. There's just rare times where I'll put on like a half position and then get into the full position while it's against me. But again, almost never. I'm pretty much just, boom, here's the point. This is the risk reward point. This is it. I see the buyers or sellers starting to take control. Slam in. That's my style. So to get to the question about adding. So first, it has to be an imbalanced environment. So this is not I will never do this while we're rotational, just kind of trading in a range-bound zone. Price is messier inside those higher volume areas and zones. It just does not trade as cleanly. So there's more noise. So there's more opportunities for, if you're trying to add, and by the way, when you add to a winner, you're worsening your theoretical average. So it's a recipe for getting shaken out of quality ideas. So it just doesn't work well, for me at least. So it can't be that environment. It needs to be an environment where we're trending, where we're imbalanced, where I have an idea on some bigger picture chart that I would use, bigger picture kind of profile stuff. Hey, we've got open space. I can see a target quite a ways away from here. I can see clearly that this market may want to run to this area. As long as, by the way, line in the sand, it doesn't revert back beyond XYZ level. So you've got that really good risk reward on a higher time frame. And then intraday, it's trending nicely in the direction of my trade. And then how would I execute those ads? It's quite simple. I just look for pullbacks within a trend. I'm essentially a pullback trader through and through. You will rarely ever see me take some form of a breakout trade. The only time I take kind of a breakout trade would be similar to the big picture crude oil position that I'm talking to you about now, where I'm essentially anticipating a break, because it's one of my principles that if we're compressing into an area, I think the break is likely, so it's worth positioning for that. But notice I'm positioning for a higher time frame break, but the intraday chart break occurred, and then I found a pullback where buyers were weak to get involved, and then I found further pullbacks to add to the position, get back in full size. So I hope that answers it. That's it. I keep it pretty simple. Once my intraday definition of trend has been violated, I'll no longer be in that trade. I'll no longer be looking to add to those positions or anything like that.
You want there to be another destination for the ad.
It's got to be. It's got to be.
Right?
Yeah.
That is what made.
And importantly, people have really different approaches with this, but my approach with risk with ads is that I treat them as a brand new trade. The added size has its own stop.
Got it. I like that.
I'm saying I can choose another turning point here, which is going to give me a rotation in the favor of the overall trade. If I'm wrong on that, the add is invalid. I may try it again at another point, but I really do separate between kind of overall thesis from the higher time frame and then short-term order flow, turning points, all that
That's
kind of
why
stuff.
adding to winners is hard, because you could blow up the whole great idea because you end up getting out of everything.
That's right.
And you don't. And that's a great way to handle it, because you'll
Yep.
blow
So
up a great idea.
just like there's really important times you need to know when to trade, just like you need to know when not to trade, adding is no different. Adding it needs to be special situations in which you have studied, built playbooks, as we call it, identified under these conditions, it is a positive expectancy decision for me to be adding to positions. And here's how I'm going to do it. Here's how I'm going to manage the risk. Everything about it needs to be thought out in advance. It's not just, oh, baby, we're hitting a winner here. Let's make it bigger. Let's hit a home run. No, that doesn't work, guys.
No, I mean, that's a great, that's what makes it difficult, because you have to treat it and compartmentalize it as a separate trade. Almost ask yourself the question, if I didn't have a lot of money on the table and short from way above, let's say I wasn't in that trade, would I look to honestly get short here? And if the answer is yes,
Absolutely.
then that's a good add. If the answer is no, I'm just adding because I want to make more money because I got a lot of money into that first one, no, that's the wrong and dumbest way to add.
Absolutely.
You pretend like you're
Well
not
put.
in the first one. But it's a very difficult. You got to be. Here's the key word: discipline. You have to have the utmost discipline to add to winners, and it has to be.
And I like to say also, people think that it takes nerves of steel and ice water in your veins and all these kind of things, and even to a lesser extent, the word you just used, which is discipline. I kind of like to put it a different way. There's nothing wrong with, obviously you need discipline and whatnot, but if you've got the right belief systems about what you're doing, you no longer have to fight yourself to do what's right. So there's no longer discipline required. So what I like to talk about is process. I have an entire written out plan for here's how I add to things. Here's the conditions in which I do it. Here's how I do everything about it. So I have a process to lean on that guides me. And then sure, there can be some internal struggles or whatever that now you require you to buck up and do what's right and have discipline and things like that, self-control. But that's kind of a different story altogether. Most people, Anthony, don't have a good enough process to even know what they're supposed to do, really and truly. And so all their analysis at the end of the day becomes hindsight. They're like, I should have done this, I should have done that, purely based on hindsight rather than what their process called for them to do under those situations.
And they don't realize what they missed, or their process is trying to be exactly like someone else's, and you can't,
right?
In my opinion, you can't have a process exactly like someone else. There's structure.
We think that people should be unoriginal at first. At first, you should adopt something from someone else. And adopt things from multiple different people, right? Experience different ways on this kind of path to find your niche and where you operate best. Your time frames, your markets, your strategies, all this kind of stuff. But guys, you're not going to reinvent the wheel right off the bat. You're not going to discover you need to try and be Anthony for a day, try and be Merritt for a day, try and do these things and adopt these things, and then you're going to see, oh, this works for me, this doesn't work for me. Let me add this and this into, and now you earn the right to kind of start making things your own and developing into what we call your best trader, which is what it's all about.
I'd rather have someone with a process that they consistently executed, and the process sucks, but they're consistent at executing. And then you can look back and say your plan is bad, and we know that.
I'll take 10 of those.
Yeah, give me that, because now I know I'm working with someone who does what they say, or does what they want to do, and you could then obviously make the process better or pull some things out. But you got to start from.
And for those of you listening right now that are feeling a little bad about yourself because you don't do what you say, I'm telling you the answer to that is to change your beliefs about what markets are, about what trading is. I talk a lot about this and whatnot, but it's most of what I've garnered about that comes from Mark Douglas's book, Trading in the Zone. You adopt those principles, you really, really put in the work journaling and meditating and visualizing and getting ready to trade by not just focusing on charts, but focusing on yourself and the way you think about things in terms of, instead of being right on a trade, thinking about just, is my edge present? How much risk do I want to take? Let's find out if it's going to work or not. I have no freaking clue. Just like I am right now in this position. I have no idea if it's going to work or not. No clue. I think the risk reward's there. I think I got into a good initial position. I'm playing the upper end of a range here on the ads. It's still technically in a downtrend in my favor. All these things. So it is what it is, and I have no idea whether it's going to
You
end
want to
up
be
being
able to explain your losing trades to someone and have that someone say, I see that. I see why you took it. You got to have explanations for your ideas, winners or losers. Anyone could explain a winner and maybe BS their way through why they took it, and it was just luck. But tell me about a loser, and I often say this in the room, if someone was trading my money and they took this trade and lost X, I'd say that's a great trade. And most people don't think that when they think markets. Losers bad, winners good. That's all people think. It's not their fault, but that's what they think. Let me cut losers and take winners. You got to take the losers to find the winners. It's just being consistent, because some of your processes and some of your strategies are going to have losers. They're supposed to. And sometimes it'll be a lot, right? Sometimes your best trades are losers.
I'm about a 55% loser. I'm wrong most of the time, man.
And right, people want to be 90%, and that's where they get stuck in the systems. I'm actually doing in my room every day for a couple of days. I'm going to try it out and really get people focused on what you kind of just said, is understanding the markets the right way and not your perceived way. So even though I'm not a psychiatrist, I'm going to do what I call overtime sessions in the trading room, maybe just 10 or 15 minutes. Tell a story, talk about psychological just get away from the charts. If people want to if they're still trading, trade. Turn me off. But for 15 minutes, someone's going to call in, so to speak, open up their mic, they want to talk, and just walk through what they think the market is and how they should think of the market. So market isn't personal. It's not, never should be you against the market, let me beat the market. It's about just doing what you say, coming up, and so when you're done at the end of that session, you could say, hey, I might not have lost weight today, but I worked out for 30 minutes, I sweat, and my calories are below 1,500 on the day. You feel good when you went to bed at night. You might not have lost weight that day, but you did what you said you were going to do. Same thing to implement when you trade. And you could draw a strong parallel to losing weight, because it's a lot of what it's hard to lose weight and keep weight off, and people often break those rules.
Yep.
So it's your perception. But that's good. Thanks again, Merritt, for coming in and doing this.
Always a pleasure, man.
Yeah, we'll look forward to it again in the future. And then we'll stay in touch. But glad to have you back from Iceland, safe and sound.
Thanks, brother. Thanks.
You know they named Greenland, and that's all ice, and Iceland, and it's all green and beautiful for a reason. They didn't want people going. Is that true, that history? Did you know that?
That is absolutely true. But I can tell you that in March in Iceland there is plenty of ice.
There is a lot of ice. That's nice.
Yeah, I hiked a glacier, and there's this area called Diamond Beach. You should Google it. It's all these old like icebergs and stuff, where this big lagoon that they used to be floating in has receded, and these big chunks that look like diamonds are scattered all over this beach right on the waterfront. It's otherworldly. It's crazy.
It's cool stuff. All right, my friend. Thanks again. We'll see you soon.
All right, man. Thank you. See you.
Guys, I'm going to end the recording.